Let's be real, investing sounds intimidating. Stocks, portfolios, risks, where do you even start? But here's the truth, the earlier you start, the more powerful your money becomes. And for Gen Z, that means right now. In this video, we're breaking down investing in a way that's actually easy to understand. No finance degree required. Whether you've got $20 or $200, we'll show you how to make your money work for you, build real wealth over time, and avoid the rookie mistakes that trip people up. Ready to take control of your financial future? Let's dive into Investing 101. Today, we will talk about Investing 101, a beginner's guide for Gen Z. So before we get started, make sure to hit that like button, also subscribe to my channel. Why Gen Z needs to pay attention to investing. You've grown up watching inflation, rising housing costs, student loan debt, and financial uncertainty. At the same time, you're also the most connected, tech-savvy generation to ever exist. With access to countless platforms and financial tools, you have more power to shape your financial future than any generation before you. Starting early means you can take full advantage of compound interest, the secret weapon of long-term investing. Even small amounts invested now can turn into life-changing sums over time. What investing actually means. Let's strip away the jargon. Investing simply means putting your money into something with the expectation that it will grow over time. Instead of letting cash sit in a savings account earning next to nothing, you're putting it to work. The goal isn't just to save, but to grow wealth steadily and intelligently. Whether it's stocks, real estate, or even digital assets, investing means you're taking part in the economy rather than just watching from the sidelines. The power of compound interest. One of the most important concepts to understand is compound interest. Think of it as interest on your interest. When you invest money, you earn returns. Then, those returns start earning their own returns. Over time, this snowball effect can lead to exponential growth. The earlier you start, the more time compound interest has to work its magic. Even a small amount invested consistently in your 20s can outgrow larger amounts invested later in life. It's not about how much you start with, but how long your money has to grow. Getting over the fear of starting. One of the biggest hurdles for new investors is fear. Fear of losing money, of not knowing enough, or of making a mistake. But like anything new, the key is to start small and learn as you go. You don't need to be an expert on day one. What matters is building the habit and staying consistent. Use free educational tools, follow credible finance creators, and ask questions. Knowledge compounds just like money does. Choosing the right investment platform. Today, there are dozens of apps and platforms that make investing accessible from your phone. You can start with just a few dollars. Look for platforms that offer low fees, intuitive interfaces, and strong educational resources. Many of these platforms also let you invest in fractional shares, meaning you can own a piece of companies like Apple or Tesla without needing hundreds of dollars. Choose one that aligns with your goals and feels easy to navigate. Remember, ease of use leads to consistent behavior. Understanding risk and reward. Every investment carries risk. The higher the potential reward, the higher the risk. Stocks can rise and fall in value, sometimes dramatically. Bonds are generally safer but have lower returns. Real estate can grow steadily but requires more capital. Cryptocurrency is extremely volatile and speculative. Understanding your risk tolerance, how much volatility you can handle emotionally and financially, is critical. Don't invest money you'll need in the short term. Investing is a long game, not a get-rich-quick. For beginners, the best approach is often a diversified portfolio. That means spreading your money across different types of investments so you're not putting all your eggs in one basket. A great starting point is a low-cost index fund or ETF, which gives you exposure to hundreds of companies at once. You don't have to pick the winning stock. Your investment rides the wave of the entire market. Over time, markets tend to grow, and you get to benefit from that upward trend. The importance of consistency. Investing isn't about timing the market. It's about time in the market. Instead of trying to buy low and sell high, focus on consistent contributions. This strategy, known as dollar cost averaging, involves investing a set amount of money at regular intervals, regardless of market conditions. It helps reduce the emotional roller coaster of watching prices rise and fall. Even when the market dips, you're buying shares at a discount. Over time, this approach leads to solid results, avoiding common pitfalls. New investors often make the mistake of chasing trends, listening to hype, or trying to get rich overnight. Meme stocks, social media tips, and hot takes can be tempting, but they're often risky and short-lived. Focus on fundamentals. Think long-term, and always do your own research before putting money into anything. Avoid emotional decisions. Investing should be boring, consistent, steady, and focused. That's how real wealth is built. Using tax-advantaged accounts. Depending on where you live, there are likely tax-advantaged accounts available to help you save for retirement or other long-term goals. In the US, accounts like the Roth IRA or 401k offer special tax benefits. In other countries, there are similar tools. These accounts allow your investments to grow without being taxed every year, which can make a big difference over decades. Take advantage of them early. Even if retirement feels far away, your future self will thank you. Setting financial goals. Investing works best when it's tied to specific goals. Maybe you want to buy a house, start a business, travel the world, or retire early. Each of these goals comes with different timelines and risk profiles. A long-term goal like retirement can handle more market ups and downs. A short-term goal like saving for grad school might need a more conservative approach. Define your goals clearly and let them guide your investing strategy. Learning never stops. The world of investing is always evolving. New technologies, industries, and financial products are emerging all the time. Stay curious. Keep reading. Listen to podcasts, follow reputable financial educators, and track your progress. The more you learn, the more confident and empowered you'll become. And remember, you don't have to know everything. You just have to be willing to grow. The wealth building mindset. True wealth isn't just about money. It's about options, freedom, and peace of mind. Investing is one of the best ways to build that kind of life. It allows you to escape the paycheck-to-paycheck grind, to weather unexpected storms, and to take control of your time. It's not about being rich overnight. It's about building a life that's rich in meaning, flexibility, and security. That journey starts with one simple step: choosing to invest in yourself. Investing might sound intimidating, but it's actually one of the most empowering tools you have. You don't need to be a finance major or have thousands of dollars to get started. All you need is the mindset, a few tools, and a commitment to learning. Start where you are, use what you have, and grow from there. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.